Alright guys, some charts quickly. We'll start with the NVA. So NVA, the highest here was highest close out was 22.5 cents. The highest it hit prior to that, what was that? That was 23.5 cents. Okay, so since then we've seen the capital raise, 21 million cash raised at a share placement price of 17 cents. So it's very normal to see the share price just pull back to wherever the capital raise was raised at, as you have profit takers and just usual shareholders just getting out before the price drops because of that factor. So we're not going to be surprised if it gets down to 17 and 18 cents, which is it's done. Support for me is around the 16 cent mark, thereabouts. That to me is like another buy zone here between 16 and 18 cents. Hits around here, you buy as much as you can. Now if support breaks here, the next zone of support would be around the 12.5 cent zone. So here I'd expect like a quick drop from here between 16 and 12.5 cents, just because of this gap here which exists. There's all this buy pressure here, and there just wasn't much trading taking place between this price here. So you just have people probably not want to step in until it hit this kind of price there. Okay, but I think that's very unlikely. I think what's most likely is for it to settle around here, news flow to come out, and we're going to see it push back up, backed by strong fundamentals. You know, we're seeing awesome drill results coming out, and the fact they've now got 36 million cash in the bank, so they're now in a far more dominant position here than where they were here or there. You know, with way more cash in the bank, minimal dilution, and only another 125 million shares on issue for another 21 million cash. You know, when this capital raise is going on back here, it was they had to raise another 16 million by issuing another 400 million shares. And when that was all done and over, and we had this share price suppression, this is what happened next. Okay, so I'm holding my note. I'm not selling a single share. No way. Next up, I'll look at OAR. OAR. This looks really good to me. So it looks like we're forming a bull flag there, from 1.8 cents to a high of about 2.7. So we're looking at about a 0.9 cent break, which would take us, you know, with any kind of news, maybe from Gibraltar, 2.3 cents. The target would be like about 3.2 cents, something like that. Which also, if we get there, we're starting to look at highs again, and we know what happens when the share price is hitting those 52-week highs. You know, it can really move. It's a very bullish indicator. So it's going to be really interesting to see what news flow brings us again with the OAR. We've got news coming out from a few sources here, so anything could happen. But this to me, that's a bull flag. CTM, it's well within this uptrending channel here. So the good drills come out from the infill drilling, and what happened? I think we come up here. We come at the top of this trend line here at 59.5 cents, and sold back down, closed at 55 cents. But I remember I was saying when I made the video on CTM last that I've noticed the sell-off on the day of the good drill results, but then when the dust settles and the traders leave, that it trends back up. And I said I wouldn't be surprised if it ends up in the top of this trend line here. So what's going to be interesting to see whether it breaks out above this trend line here, or whether it just gravitates back toward this zone again. But I think it's going to, the way it's looking to me, I wouldn't be surprised if it pushes above this trend line, and we start getting around the mid 60s again. Okay, so I retained about 40% of my CTM holding. So what I'm seeing here in the chart, that's giving me a reason not to sell it and flick it off into EMH like I was possibly planning on doing. I'm just going to hold it out for now. The other 60% I put into INF. So look at INF. INF's looking really good to me, so I entered in at 11 cents. Back here, the target was the 15.5 based off of the distance here, which it hit. There's your 15.5 there. And then there was a sell-off right away on this candle there. But what I'm liking here is it's just forming a nice tight range here. We got on the 2 hourly. You know, we can see how it's looking there, or even on the 4 hourly, might show a bit better. So it's just forming a nice tight range again here, so I'm happy with that. That's expected for it to consolidate after that kind of move. So I'm just going to continue to hold INF. The interest in it, the volume in it has certainly picked up over the last while. We look down here, we have volume, okay? So that's great. That's reason to hold, okay? So I'm going to keep a hold of my INF. We look at, say, let's look at, I'll look at PLS. PLS here. Alright, so going back on PLS, so this is a daily. So we've been following this inverse head and shoulders here for months, okay? And there it is here. If we zoom right out, this is on the daily, so each candle represents a day's worth of trading. This is it zoomed out. So the left shoulder had two heads to it. The head there, the right shoulder had two heads to it, and now it's broken out in similar fashion to how the share price declined back on its way up. It's basically a mirror image. So I wasn't at all surprised in the way that it moved from, you know, 52.5 cents here, where there's this big gap here on the other side. You know, now we're starting to see it consolidate around this kind of price, okay, around the 73 cent mark. Okay, so PLS is a buy right now, the way it's been looking on the charts. Okay, but like always, if you're buying a stock which is moving out like this, you know, you're ready to sell quickly. You've got a tight stop loss. You know, but your buys would have been on the breaks. Your buys would have been here when it broke out of that 40-cent zone. It would have been here. You know, right now, yeah, technically still a buy, but I'd still just watch it. Wait, see what happens next. LTR. So LTR. This was a little bull flag here. In the last video, I was saying it was probably going to hit 27, 28 cents, which it's hit. And the day since, it's just been forming another flag. So that's on the daily. We'll go to the 4 hour and look at this tight price action here. So that's another bull flag to me. And the next price target from this breakout would be 29.5 cents. And that would be highs again. Okay, so with those highs again, you know, we know what we can expect if we break out those highs again with volume, okay? And we know the mirror, we know that what the mirror news flow has in store as well. So, you know, I think from here it could run, especially if it closes above 29.5 cents. And what else I look at? Let's look at ADN. So ADN, it was due for a major correction like this. We're seeing a huge sell-off. So here was this spike high candle. So I'll go on the daily. And we see it's now a spike reversal candle. Okay, so I change the trend. So you look at, say, that Jack Schwager in his book, he was talking about these. He talks about you wait for a candle like this one here, and it's going to close below the previous two. You know, after something like this, where the price just gets rejected, pushed back down, he said a candle like that can be a good indicator. And then when we see these successive ones here, so it's gone from 36.5 cents down to 27 cents. Okay, and the kind of target we could expect on the pullback, it's 23 cents. So this now looks like an ascending scallop move. The pullback would be about the depth. Say we cut the this cup off here. We're adding the I think it's about, let's see from here, we're looking at 18 cents, depth of 13 cents, so 5 cents on top of that, 5 on top of the 18, that gives us 23. So we're looking at a target of about here for the pullback, and this would be the buy zone. And that's also going to be sitting on the trend line of what used to be overhead resistance. Okay, so that may come in support right there on the ADN. So I think that'll do for now anyway, guys. We'll leave it there. Alright, good luck.